Rich people build their credit. Bull crap. All the rich people that we interview say they get out of debt and stay out of debt. And that's how they got rich. They don't pay payments all the time. Because, see, there's only one way to build your credit, go in debt, right?
Right.
Why? So you can build your credit. Why? So I can go into debt. Why? So I can build my credit. Why? So I can go into debt. Why? So I can build my credit.
All right, today we're going to talk about credit. I feel like credit is such an important thing that a lot of us don't know, and let me tell you, I learned so much doing research on today's topic. I'm very happy to talk about it. Of course, I have my trusty phone here, as always, to read from them, tell you guys some of the things that I learned, and hopefully inform you on some of these new things, give you a little bit of history of the credit score, and how you can build credit when you have none. I think that's a very confusing thing for a lot of people. Definitely was a confusing thing for me and my wife and countless other people that I know. So without further ado, let's get right into it. And the first thing I want to talk about is, well, the history of the whole thing. So FICO stands for the Fair Isaac Corporation. It's the creator of the credit scoring model most U.S. lenders used. Now, this corporation was founded in 1956 by Bill Fair, who was an engineer, just like me. I'm a software engineer, pretty cool. And Earl Isaac, who was a mathematician, hence the name Fair Isaac. So already something I didn't know, Fair Isaac Corporation. Now you can use this in trivia night when you're out with your friends at the bar and they ask the question, what does FICO stand for? You will be that much more knowledgeable, so you can thank me in the comments down below. Now, before FICO, check this out. This is like one of the craziest things. Lending was subjective and inconsistent, okay? So lending was based on personal relationships, gut feelings or intuition, or biases like gender, race, and neighborhood. Can you imagine being declined a loan just because of the way that you looked? Or because maybe that one day that person didn't feel so good and they didn't feel like giving you a loan. I mean, that makes for very inconsistent and unfair lending. It's not the right way to do it. So what Bill Fair did and Earl Isaac is they created FICO. So the result of this was, two people with the same finances could be treated very differently. So the purpose behind FICO was Fair and Isaac wanted a consistent data-driven model to judge borrowers. Sounds very plain and simple. It sounds fair, and I think for the most part it is. It's very logical, it's very data-based, and let's go into some of the more points. Their goals were to remove the bias from the lending decisions, and they wanted to do things like use math and data instead of opinions. And this would make credit faster and fairer. So this led to the creation of the Fair Isaac Corporation, FICO, as we all know it today. You've probably heard of the FICO score, and that's one of the next things we're going to go to, because the FICO score is one of those things that is so coveted. I think a lot of us are always chasing, the 800s. I don't even know what the maximum is. It's like 800 or 850, and we're always saying, I want more, I want more, I want more. But what does it take to get more? And what is the FICO score actually comprised of? Okay, this is all prerequisite to how we can actually start building credit. So the FICO score is a 3-digit number that ranges anywhere from 300 to 850, so 850 seems like the maximum, showing how likely you are to repay borrowed loans. Okay, it's based on info on your credit reports, including, now this is something I learned, the exact breakdown of how this FICO score is comprised. Let's go into it. So your payment history is 35%. Okay, your payment history being how many of these payments that you make every single month are on time. That's one of the most important things when it comes to deciding your FICO score. And I'm going to go into this a little bit later, but it's definitely one of the biggest, let's say, blunders people face when taking out loans and paying off credit is we forget to pay it on time. A lot of people, including myself, don't even do one of the major tips that I probably will do after this is set up autopay. Rather, I do have autopay for the minimum payments, but instead of minimum payments, you'd be better served if you can just pay off the loan in full every single month. Pay off that balance in full every single month. That's the way to do it. If not doing it autopay, at least set up a reminder on your phone. That's also what I do on top of the autopay, just to be very on top of things. But maybe I need to up that a little bit and do the balance, because I just have frankly, I have the minimum on autopay, and then the reminder is set to tell me, hey, by the way, you should pay off the whole balance. But let's get into that, okay? The next thing is credit utilization, how much you owe versus your available credit. So 30%. Okay, typically you want to keep this credit utilization under 30%. We're going to get more into this later, but this is, based on the amount of available credit you have left, what is the amount you use? Typically, the less you use, the better it is for your score. You can imagine if someone has let's say an overall credit limit of $1,000, if someone is constantly maxing that to like $990, $1,000, or like $1 less every single month, it's probably not great. It doesn't show very great spending habits. I mean, you're constantly racking up the credit debt, right? You're constantly buying things, maxing out that debt, and you sort of just can't really control yourself. So the less that you keep it, the better it will be for your score. The next one at 15% is for the length of credit history. How long have you had this card open for? Has it been 5 years, 10 years, 15 years? Typically, you want to open it for as long as you can. You want to keep it open for as long as you can, and you don't even necessarily need to cancel old cards if you don't have to. Just because they're not being used doesn't mean you have to close them. Keep them there, keep them open, keep them with a low balance, ideally 0, and you'll be fine as long as you have that open for a very long period of time. The next thing, 10%, is new credit, so recent applications. The final thing is credit mix, the different types of credit, things like cards, loans, etc., student loans, car loans, retail loans, consumer debt, sort of these things, a mixture of different credit from different places to show that you can balance different type of responsibilities from different types of bucket. So, the next thing here, what does a FICO score help you with? You probably know a lot of these things already. It's very, let's say, common to understand why someone would want a high FICO score. Okay, so this is used by lenders to predict your risk and repayment behavior, and it affects things like loan approvals. You can think about credit cards, auto loans, personal loans, okay, interest rates. Higher score is low interest rates. Think about the last time you purchased a car. Think about the last time maybe you bought a house. A lot of times you're shopping around to get the best interest rate, but ultimately it comes down to how good your credit score is. Think of it like a report card, okay? You're pretty much telling the lender, I have a very good history of paying off loans. Okay, I can pay this balance off, you can trust me. So if you lend me your money, I promise you I'll give it back. And that's exactly what they want to see. Although ideally you can make an argument that, and sometimes I think about this, imagine someone with not so great credit, maybe they might approve you for, a higher loan than you can actually afford, and maybe they actually want you to pay interest because then that's how they make money, right? So it's kind of like a weird thing, because you can imagine the person with a perfect credit score is just going to pay back exactly what they got and nothing more, versus someone else might pay a little bit of interest on that, and that's how these banks are making money on that interest, and they might be a little bit more happy about that. So kind of an interesting debate to think about. Never really thought of it that way, but yeah, it's kind of an interesting thing to think about. Things like credit limits. Higher score equals better credit limits. You can increase your limit every year if you want, every couple of years. If you have a really good credit score, your income went up, you're keeping all your balances in check, you can oftentimes increase your credit limit to do what? Spend more. Okay? You can continue spending more, you can continue racking up that debt. That's what these companies want. But you and me, people watching this video, are going to do their due diligence and pay off that balance every single month because that's the right thing to do, the responsible thing to do. It's going to help you out with things like apartment rentals and utilities and things like insurance premiums and job checks. These are all examples of what a FICO score can help you with. I don't think it's anything grand. I don't think it's anything so new. Probably if you're watching this video, you already knew that. Finally, why does it matter? It's used in around 90% of lending decisions in the US, and it's the gold standard for measuring credit worthiness. It's probably going to be around for a long time, so we better get used to rolling with it and understanding how it works. So this is the prerequisite. That's the first half. What is the FICO score? A little bit of history about it. What does FICO stand for? Who are the people that created it? Now we're going to get into the meat of the video, and how can we build credit from someone who has no credit? Okay, I feel like when I first opened my credit card, I had no idea of some of the things that I'm going to present you with, and frankly, my dad helped me open up my first credit card. I kind of skipped all the beginner steps and just went straight to opening up a credit card. How I was approved for it, I have no idea. Maybe I had some credit already from some other payment transactions that I wasn't aware of. Frankly, I wasn't really entirely sure. My wife, kind of along the same line, she didn't really have any credit. She bought her first car, and that sort of helped her build her credit, but there's probably better things that you can do than immediately buying a car that can help you ease into the credit building and make it easier for someone to manage. Because you can imagine buying a car, if you have no credit, you might have a high interest rate, and with a high interest rate, you're going to have high monthly payments, and with high monthly payments, it's going to be more likely that you don't pay that debt every month in full. And that's the biggest thing here I really want you to take home. So the first thing, the basics, this is something brand new I learned about, is getting started with a secured credit card. So different companies like Discover and Capital One, and Discover, it's called Discover It Secured, Capital One Premium Secured. These are cards where you deposit a small amount, usually like 200 to 500, and this amount becomes your credit limit. Okay, you can use it for small purchases every single month, and you want to make sure, just like with a normal credit card, that you pay this off in full every month. But the good thing is that these balances are typically small. Again, the $200 to $500 is going to make it so it's easily manageable. It's something that you can track, something that you can easily pay for. It's not so overwhelming that you're going to be, perhaps scared. I think that deposit is typically something that you feel comfortable with, right? If you're a student, maybe you're just starting your first job, you tell yourself, I can afford $200 a month credit. Let me put it as a deposit. I'll pay that off every single month. And then this is the cool thing that happens. Typically around the 6th to 7th month timeline of you opening that card, they're going to do a performance review. And based on that performance review, they're going to see if they can actually transition you into an unsecured credit line, which doesn't require that deposit. This is when you can start racking up that debt, increasing those credit limits, and just going at it, okay? And at the time that you're transitioned to an unsecured credit line, the security deposit is typically refunded back to you. So kind of a very cool thing. For people that have no credit, open this secured credit card, deposit a small amount, something you know for sure you can manage. Do that for 6 or 7 months. You'll be building your credit, you'll be building great habits, and it's something that you know you'll be able to pay off with no problem. The next thing here is to become an authorized user. I'm sure if you think of your friends, your family, maybe some coworkers, people that you really trust, you probably know someone that's maybe a little older, maybe the same age, that has gone through this journey themselves already. They might already have a stellar credit score. They have already gone through the process of paying their on-time payments and making sure that their credit is in check. What they can do for you is they can actually list you on their card as an authorized user. And by being listed as an authorized user, their good payment progress will be reflected on your credit score. Okay, their good history leaves a positive impact on your score. So the good things they do can help you out. It's sort of like it's a favor, right? So find a family member, find a friend, find someone with a stellar credit score, someone that you can really trust, okay? Because when it comes to money, things get a little bit murky very quickly. So make sure it's someone that you feel comfortable talking to about these types of things, right? Because to be honest, I'm not entirely sure what happens if you miss something. If in this whole process they're adding you as an authorized user, but let's say maybe you have your own credit card and you don't pay for it, does it also affect their score? These are things that I want for you to find out, some of the action items that we typically talk about at the end of these videos, something good for you to think about, something good to find out. Finally here is to use a credit builder loan. Something else I didn't know about this. Check this out. It's offered by many credit unions and online banks, and pretty much you repay a small loan anywhere from $500 to $1,000 that's held in a small account until you finish paying. And your payments are reported, helping you build your credit history. So it's a specific loan that you can take from one of these credit unions or online banks that's the sole purpose is to help you build your credit. So do these things, right? It's kind of the same as a secured card. You're taking out a small loan, you're paying it, but these are being reported to the credit agencies so that way you can continue building your credit. So that's some of the first stuff, right? The basics, the absolute basics of things that you can do to start building your credit. Let's go up to the next thing, which is set up good habits. Always pay on time. And if there was anything on this video that is important, the most important I would say is to always pay on time, okay? Because we saw that the payment history is 35% of that total FICO score. Even if you don't pay it in full, paying it on time is much more important. So as long as you can at least meet the minimum requirement to pay your balance, right? Make sure you're hitting that every single month, whether through auto pay, reminders on your phone. If there's any one thing I want you to take away from this video is to always pay on time. Keep your utilization low, less than 30%. If you have an $1,000 credit line, you want to keep it at $300 or below. Just because you have $1,000, it does not mean that I want you to go and spend money on something that's $900 and rack it up to 90% of your total credit limit. Okay, you want to keep it at 30% and below. And I promise you, you might be thinking, oh, but I want to have fun. I want to buy new things. I want to get the coolest gadgets to what? To probably show off to your friends. I promise you, it's not fun. It's just not worth it. Live below your means. Live below that 30% credit utilization, and I promise you, your life will be much better. You'll be able to build up a credit score. And then when it comes down time to get the things you really want, maybe you do save money for that fancy car. Maybe you do save money for that fancy house. Maybe you do save enough money, to get that loan that you really need to start a new business. You'll be much better able and much better equipped to do so because you followed these smart habits here, okay? And what you can do at the end of the day is once you develop these smart habits, if you do want more, you can increase your credit limit, right? So if you do something like increase it to 20,000, that 30% becomes a little bit higher, so now you have a little bit of elbow room. But again, it doesn't necessarily mean that you want to go higher. Just because the 30% is higher doesn't mean you necessarily want to go higher. So just something to think about. Be very particular with how you spend your money. And let's get on to the next one here. One of the good things that you can do to set up good habits is you can also use great tooling, things like Credit Karma. I use Credit Karma almost every single day. I'm not sponsored by them in any way. Okay, maybe one day I will. Who knows? I mean, we're just starting out in this channel. We'll see what happens in the future, but I'm not sponsored by them. No affiliates, nothing. It's just an app that I use. It does a very good job of simulating credit history and the different credit scores over time. So use that as a great reference point to track your credit score, track your utilization. It'll give you great details about exactly how you're using your credit card. So a good way to sort of gamify the process and stay on track, and something that I really think that everyone should have. You also don't get a hard inquiry on your credit card. So your score is not reflected every single time you open the Credit Karma app. It's a soft inquiry, okay? The next thing here is to diversify and expand over time. After 6 or 12 months, apply for a regular unsecured credit card or a store card and use it lightly and pay it off in full monthly. Okay, that's another thing. We talked about paying it on time. Now we're getting to the next level where I want you to pay it off in full, okay? If you cannot pay off your credit card in full, I think you should not open up a credit card, and maybe you should go down a level here. And what do I mean? At this point, right, 6 to 12 months, we're getting to the unsecured credit card, which means there is no sort of small deposit. There's no really limit. It's much higher. You can typically spend a lot more. But if you know for sure that, oh, now I have all this new money, I can spend a lot with it. If you know for sure that that 30% of your credit limit is not something that you can pay off every month, I would encourage you to, before even opening up that unsecured credit card, continue going back to a secured credit card, building those healthy habits, and then at the point that you say, I can afford to pay off that $1,000 every single month, then you go ahead and do it, not any sooner. I promise you, if you get into debt, it's just not fun. It is absolutely not worth it. No one that has been in debt will ever say that it's worth it, unless it's something like a mortgage, and that's the only one that I would say is good. Other people would argue against that. Some people, for example, like Dave Ramsey, I know I mentioned him a lot, he would say to pay off the mortgage immediately, no questions asked. Get a 15-year mortgage, pay it off as quick as you can, forget about it. But in this case, I think it's okay to have a mortgage. You can use it sort of as leverage if you want to ever rent a house out, so on and so forth. Maybe we'll get that in another video. The point is, don't get to this point unless you know you can pay off that debt in full. So on time and in full, two of the most important things when it comes to your FICO score, okay? Keep accounts open for a long time and mix your credit history. You want things like student loans, auto loans, personal loans. All these things can improve your credit mix. Think about it. You have someone that has a high FICO score, and not only that, they have it from a variety of different lenders, okay? They can work with multiple people. They can pay off a variety of different things. It's just more proof that you are a respectable borrower, okay? You have high agency, you have high responsibility. You can do these things on your own, and lenders are willing to offer you more because you have proven to them that you can actually handle that responsibility. Okay, some of the other tools that we can use, some of the ones that I learned about, apparently in UK, only for UK residents, unfortunately. Maybe there is something in the US, but there's this cool thing called Experian Boost, which is Experian's a credit agency in the UK, and what they do is you can link Experian to, I guess, your transactions on your bank account, and they'll find these monthly payments that you're making on time, and they'll use that to boost your score. Perhaps there's something similar in the US. I do not really know. Someone let me know in the comments, and if I do find something, I'll overlay it here in this section. If not, then you know I didn't find anything. But that's just one tool you can use, especially in the UK. Again, if not, you can use Credit Karma. I know I already mentioned that, but just another tool that you can use to sort of track your credit. And I think it's one of the best things that you can do. I love it. Again, I use it every day. Phenomenal. Finally, be patient, okay? This takes time. This is not something that in 1 week, 2 weeks, 1 month, you're going to see a significant difference. I want you to think about this long term, like when it comes to investing, right? In about 3 to 6 months, you can generate an initial score, and in about 1 to 2 years, if you're disciplined, if you do everything right, you can probably end up somewhere in the mid 700s, which is already a fantastic, fantastic achievement. And I promise you, once you're there, it's very easy to just continue going. It's not like once you develop this great habit, all of a sudden it's going to fall by the wayside, and you're going to forget how to manage your money, and so on and so forth. People that make it to this point are good with their money. You don't get there without being good with your money. So just be patient. Keep looking at things like Credit Karma daily, weekly, monthly, whatever works for you. Make sure you're paying off these credit cards in full and on time. The two really most important things that I can offer you. After that, you can worry about, getting new credit cards. For example, I have a lot of credit cards. I'm not going to lie. Honestly, I probably have like 10 credit cards because over the last 8 years, probably even 10 years, I have opened different ones at like Macy's and Best Buy. I have one for Petco for my dog. I have one for Amazon because I shop at Amazon a lot. So there's a lot of perks that come with these credit cards, right? Sometimes you get 2% cash back. Sometimes you get travel points like me. I have the Capital One Venture card, which is awesome for travel. I hope to one day go to Japan, and I'm hoping to use those travel points for the flight over there. But there's a lot of perks that come with these, and you'll get there if you're patient and diligent. But again, and I cannot stress this enough, just pay it every single month in full and pay it on time. All right? Common mistakes to avoid. Common mistakes to avoid for beginners here. Don't apply for too many cards too fast. Every time you apply for a credit card, it is a hard inquiry on your credit. Now, some places may not do this. It's typically good to ask the place. For example, you're opening up a credit card at Best Buy, maybe at Petco. Ask them, is this going to be a hard inquiry on my credit report? Typically, a hard inquiry can affect your credit score. And if you go on Credit Karma, you can see a category for hard inquiries. Okay, so anytime there's a hard inquiry, make sure you're reading the fine print. Make sure you're asking to make sure this is not happening. But even still, even if it's a soft inquiry, just don't open too many don't open too many too soon. Focus on one, build a credit on it. When you're comfortable with it, you say, I've paid this card off for like a year, I'm good. And guess what? There's this new vendor I go to a lot, and it'd be worth to have the credit card because I get some points, I build my credit, everything's good, dandy and sweet, and I know I can afford it. So at that point, you can make that decision. Don't close your oldest card. Remember, the length of these cards, how long they've been open affects your credit report positively. I have cards that have been open for 8+ years, 10+ years. Do I close those cards? No. I have a Macy's card that I probably got when I was like 21, and I'm 32 now. So imagine. It's been open for a long time. Don't close these cards. Even if they're at zero balance, don't close them unless you absolutely need to, which I don't really know why you'd have to. Maybe there's a reason you have to close an old card. I don't know. Maybe it's just the mental overhead, the mental complexity of having them open, of knowing that they're there. Just don't close them if you don't have to, okay? Don't carry a balance thinking it helps your score, because it really doesn't. Don't think to yourself, well, if I keep a 20% balance, it's under that 30% utility. So it means that it's good because I can carry a balance. I can still live my life. Just keep it all at zero. It's just less mental overhead. And any balance you carry, you will be charged interest on, by the way. Okay? As long as it's zero, you won't pay interest. But anything over, even if it's $1, you'll be charged interest on that $1, okay? And by the way, this is a video that I'm going to make coming soon, hopefully this week, about interest and APR, annual percentage rate. Two very common things you see in finance, but some people don't even know what they mean. And honestly, I didn't know what that means either. I would always see the interest rate or the APR. I thought they were kind of the same, but now I'm learning that they're not. And I want to educate you all on what each one means and how you can use it to your advantage to understand exactly what you're getting into. Finally, watch out for high annual fees on beginner cards. You don't want to be paying so much money just to be able to keep a card. There is a very famous card, I think it's called the Amex Platinum. I'm not entirely sure, but it costs like $600 to use it every year. And I saw the perks. Don't get me wrong. Some of the perks, if you're the type of person that takes advantage of these perks, are amazing. But I looked at the perks carefully and I decided I'm not going to be someone that uses this. So I don't want to pay the overhead of $600 a year. I can invest that money. $600 a year for 35 years probably isn't a bad thing. So think about these things when you are opening credit cards. Again, read the fine print, see how much they're charging you, ideally nothing. See if there's any minimum. Sometimes you have to deposit a certain amount to keep some amount. Sometimes there's different features the card offers. Just read the fine print, understand exactly where you're getting to, and that should really get you on your way. So, really happy to have gone over this today. I feel like there's a lot of things that I didn't even know about credit. When I was younger, I kind of just went into it, but you can see there are very methodical baby steps that you can take to building up your first line of credit, okay? You can do things like the secured credit card, which I think are phenomenal. 6 to 7 months, you get the performance review, then you slowly move on into an unsecured credit card with none of these, let's say, limits, and then you just start slowly managing your money. Start slowly focusing on that first card, paying for little things like groceries, gas, your dog's food, so on and so forth. If you can manage all that, maybe you want to open up another credit card. For example, like I was paying my dog's food on my credit card, but then I started opening up a Petco credit card because Petco has certain perks that I get with them. I can get discounts on the food the longer I use a credit card, so it's actually beneficial for me. And for cards like Petco, I do have it to automatically pay it in full every single month because it's dog food at the end of the day. It's not like I'm paying a balance of $3,000 every month, for example, right? So I want you to focus on these things. So let me know in the comments below, do you already have a credit score? Is it really high? Is it really low? Are you working on building it back? Do you not have credit at all? Maybe you're someone really young, a student. Maybe you're in high school, early college. Maybe you just started your first job. You have no credit. You have no idea where to start. Let me know if this video helped you because it certainly would have helped me if I saw this video like 12 years ago. So again, very happy to make this video. I'm very happy to shoot in this style. I've already said all that yesterday, but I guess that's it. So without further ado, I hope you all have a fantastic Tuesday. I'm going to be going on vacation on Thursday and Friday. I'll be leaving tomorrow night, but it doesn't mean these videos are going to stop. So I'm just very excited for that because I think it's going to be fun. And yeah, I guess with all that being said, I'll see you all next time. Take it easy and have a great rest of your day. Later.